All right, folks, our major indices are higher, but they're dealing with some individual issues today. This, as a bigger picture, investors are grappling with what to buy when the major indices, for the most part, are at near all-time highs. I want to bring in Divine Capital CEO Danny Hughes, along with ERShares founder and CIO Joel Shulman. Danny, all right, so, listen. It's tough because it's not just the tech names. We know tech has taken off, but the real estate sector is at an all-time high. It's up 6% this year. Utilities up 7% this year. I mean, these are defense areas. If they go up 7% for a year, that's pretty lucky. So if I'm in this market, I'm watching. Go.
It's hard because everywhere you look, the numbers are up huge, right? But I've been looking at energy, and that's a sector that's been beat down hard. And a big reason for that, Charles, is because of China and the coronavirus. China's one of the biggest buyers.
But it's been an underperformer for a while,
It has for about at least the last year or so. And a lot of that has to do with the U.S. The U.S. output, fracking, things like that has brought prices down globally. However, I do think that there are some really great plays here, both in the energy sector, the old fossil fuel side, as well as clean energy.
All right, in football, they call that a Hail Mary.
In investing, they call it long term.
Oh, excuse me. Joel, you're rocking. I mean, you've got 5 funds. I looked at your the one chucked with the Amazons and the Apples of the world. Facebook got a downgrade to sell today. That put some pressure on these names. Obviously, at some point, any stock that can go up 20, 40 points a day like the Amazon has in the last couple of days, at some point could also be vulnerable for those kind of moves. What do you tell someone if they're coming into the market right now, maybe want to chase Amazon?
Well, so we think, for example, our tech names, our fund overall is up around 10% year to date. And, the S&P is down about two-thirds, is up about two-thirds of that. Our tech names in this space, in the large cap tech, are up about 13.5%. Facebook's the only one that's underperforming that level. So, large cap tech is very strong right now, and we think things will continue through 2020, particularly if the political scene continues as it has the last few weeks for the Democrats. Now, what we think is a real sweet spot for investors right now is U.S. small cap, and in particular, non-U.S. small cap. Our non-U.S. small caps are up about 1.5% today, and we think this is an undervalued area. So the small caps have not yet hit record highs. They're still about 10-15% below 2018, and we think there's room to run there and the non-U.S.
You know what they call that in football? The second Hail Mary. I mean, for instance, let's just take the Russell, for instance, Russell 2000. It has been horrible. It has been a real massive disappointment. And I think the thing is, a lot of investors, almost every year, and I'm not trying to diss anyone, but Wall Street, all the pros come in, and in January, they like financials, they like emerging growth, and they like small cap. And then, as the year goes on and those things don't work out, you don't hear about them that much.
Well, we think, so our small caps are about 6-7% year to date. We think entrepreneurial small caps are a strong place. I mean, we're seeing a lot of, this is a market where there's a lot of M&A activity. The interest rates are very low. Last year we saw $3 to $5 trillion in total M&A activity in terms of deals and so forth. And so a lot of this is going for acquisitions and these small cap names. And we had yesterday a name pop 45% was acquired, and we're seeing a lot of this activity. So we think there's an extra play for investors in small cap.
Danny, other broken down names, we're seeing something of a reversal of the coronavirus. The names that weren't up, Chinese stocks are up today, Wynn Casino's up today, Caterpillar's up today, Marriott's up today. But Boeing, to me, is a wild card, right? Because a lot of people have to be intrigued by this. We're talking about a $9 trillion market over the next 20 years that they share with Airbus. They announced that they had zero orders for January. Airbus 274. The stock makes a 7-point reversal to the downside. It brings the Dow with it. Is there at any point where you think about buying a Boeing?
For me, no, not right now. I think Boeing really has to get its wings straightened out. I don't know where these analogies are coming from. It's so bad. But Airbus has really been pulling ahead of them. And from an industrial standpoint, when you're looking globally at what's happening, I think that those are going to be the most volatile names, especially when we still don't have a real handle on what's going on with China and their economy.
All right, folks, hold on for 1 second, because I got another potential game changer. Just moments ago, the Federal Trade Commission announced that it's examining past acquisitions by these big tech names. Susan Lee on the floor of the New York Stock Exchange with more. Susan.
I just got off the phone with the FTC, talking to us, a journalist, to expand more on why they're issuing these notices to the 5 big tech firms, and the 5 big ones, of course, being Facebook, Amazon, Alphabet, also Microsoft and Apple as well. And they're looking at past transactions from 2010 to 2019, and these smaller acquisitions ranging from $90 million to $360 million, which are compliant with the HSR rules, as the FTC calls it. And they're looking into what they're calling anti-competitive acquisitions, initially starting off the call by saying this is more about information gathering for research purposes. But as the call went on and as the questions came in, they said, yes, previous transactions could be subject to enforcement, and some of these deals could be unwound. And the number of deals they say that they're looking at right now, number in the hundreds, also looking at data that is being stored and being used by some of these big tech companies. And it covers both horizontal and vertical mergers as well. But just to remind you that these are smaller transactions, so we're not talking about the $19 billion WhatsApp transactions or the Instagrams that were worth $1 billion, smaller ones. And some are looking at whether or not these tech companies are stamping out competition by buying up these smaller tech firms and then possibly killing off some of their business as well. I asked the FTC specifically on this call, will you be sharing any information with the state attorney general to have their own antitrust investigation ongoing, and also the Department of Justice? And they said, well, actually, there are rules in departments sharing information, but if enforcement actions are taken and it opens up this compulsory process, that would expand our possible sharing of information with the state AG's case and also the Department of Justice as well. Right. So it's very complicated, Charles, but it looks like big tech is definitely in the focus of the governmental regulatory bodies.
Susan, great stuff. Thank you very much. I want to bring back Danny Hughes and Joel Shulman. Joel, you mentioned politics a moment ago. Right. The idea that overall the market's probably higher as the Democrats appear to be in disarray. Right. But this sounds like Elizabeth Warren stuff, right?
Yeah,
I mean, this is Bernie Sanders stuff. Yeah. And of course, this is, the FTC looking at these smaller deals. Yeah. But ultimately, if the overarching narrative by both political parties is that these big names are engaging in anti-competitive behavior, what does that do for the market? Because all of these stocks are down or flat except for Amazon.
Yeah, I mean, it's not a good sign for the market. And first of all, not that the FTC is going to listen to me, but leave them alone. Leave these tech companies alone. We have 24 million jobs in the S&P 500. Almost all the job growth, almost all of it is 20 or 30 entrepreneurial companies like the Facebooks, like the Googles. Amazon, a few years ago, had a couple 100,000 employees. Now it's about 800,000. I mean, they're creating jobs in this country. These are the companies that are acquiring other companies, and they're actually growing. They're growing the employee base. They're not reducing it. Right. Most other companies are reducing the employee base.
These are companies, though, that are global, and they are bigger than many, many governments around the world. Let's face it. And it's not that the United States wants to protect other governments necessarily from companies that have been grown here, but when you think about how large these companies have grown, how much power they have. This is not something that's new. Microsoft was doing this stuff in the 1990s. These guys are looking back from 2010 to 2019 at deals that were done. What I'm interested in seeing is how are they going to reverse some of these mergers? I mean, how do you unscramble the egg?
That's a slippery slope. You start to unwind these things and pull them apart. And again, Susan says that, they're going up to like $390 million deals or whatever, but it does open the door to potentially larger. Are you okay with this? Or are you torn by the idea that there's anti-competitive behavior? But to Joel's point, they're driving everything in this country and this world.
They are driving, especially the stock market, let's face it. But let's look at the fact that it's not just that competition is crushed, it's also innovation. One of the things back in the 90s that was a big deal was that battery makers, the ones that you used to throw out, would buy companies that were making reusable energy, and they would put them out of business. And Microsoft did this with a few other software players as well way back then. This is something that is of concern, and I think it should be of concern.
But Joel disagrees with you.
No, 100%. They are absolutely not eliminating innovation. In fact, these companies are spending more on R&D than all the other companies in the S&P combined. These companies are applying R&D dollars back in. I mean, they're growing R&D budgets by 20, 30%. They're acquiring other companies. They're growing their base in terms of employees, and they're spending money, billions of dollars per year, increasing by 10, 20, 30% in R&D budgets per year. in driving innovation. So when you think about Uber, I'm sorry, not Uber, you think about Amazon and Facebook, these companies are the ones creating the innovation in this economy. So they're not hurting it, they're helping it.
It's their own innovation, though. It's their own brand of innovation so that they can crush other innovation.
Yeah.
And I'm not saying that like Amazon's purchasing of diapers.com is going to put all diaper makers out of business, but it does create a way of them thinking about companies and how companies should deliver products to
So
people.
beyond this, what else would have you worried about the market overall, particularly from a political point of view?
The market in general?
Yeah,
or?
I mean, like the election, actions by either government agencies, ours or foreign. I mean, what's your biggest concern vis-a-vis what's happening in the world of politics? Because the rules could change if the Democrats take over.
The rules could change. Many things could happen where the rules could change. I mean, the Fed is really what's driving this market. And it's not just the Fed. It's also all global central banks that are driving this market and keeping this liquidity
And there's
where
no
it is.
sign that they're going to change, though. None of
There
these
isn't, because we're not
central
looking
banks.
at the trillions of dollars of deficit that are behind some kind of, curtain in the back that they don't want you to look at right now. And we're not looking at it right now because we like the innovation and we like the economy and we like what's
making
happening.
money.
We like what's making money, yeah.
So about 15 years ago, Tom Stallkamp, the former president of Chrysler, Daimler, and I wrote a book called Getting Bigger by Growing Smaller. This is about how big companies presumably would get bigger and stronger over time because they had access to cheap capital, they had access to the best minds than the planet could provide. And what happened, what we discovered, is that the average age of companies is 54 years, which means they got big, they got old, and they died. Little companies came in and beat them at their own game. So innovation is not going to be slowed down by companies getting bigger and stronger.
Like Joseph Schumpeter, creative destruction will take its place. Even with the largest companies out there, it's happened with all of them, whether it was Sears, Walmart, and now Amazon. We'll see. It was a great conversation. Danny,
Thanks,
Joel,
Charles.
thank you both very much.